All right, shares of Tesla trading down more than 6% today despite record deliveries in the first quarter of the year. That deliveries number coming in at nearly 423,000 vehicles, up 36% since last year. The EV maker releasing the numbers on Sunday. We'll get full Q1 results in about 2 weeks. For more on this, let's welcome in Dan Ives, Wedbush Managing Director and Senior Equity Analyst. Also a Tesla bull. Dan, good to see you. You like these numbers. You were digging them, man. Why are investors not?
Yeah, look, I think it was just a knee-jerk reaction after a stock that's basically doubled, so far the first 3 months of the year. They beat what I'll call whisper numbers. Now I think maybe some might have been hoping for more of a beat given the price cuts. Now the debate will be margins going into April 19th. I believe margins, they held the line relative to how they guided. So I think overall, this is a major step in the right direction, a murky macro when you look at competitors.
Dan, what about the fact, though, that they did fall short of the pace that's needed to attain that goal that Musk laid out in terms of 50% annual growth? Is that still attainable?
But I mean, I think 50% was really something they took off the table on the last earnings. I mean, now, granted, the longer term 50% goal, but really the number that the street investors are focused on is 1.8 million. And I think if you look at that, they are on or actually ahead of that pace. And that's why right now, of course, there's named a lot of bulls and bears in terms of that tug of war. Despite the stock doing what it's doing, I think the bulls ultimately won this battle.
But Dan, ultimately, it comes down to this price action. I mean, we're talking about a market cap almost 3 times Toyota. $602 billion for Tesla, $231 billion for Toyota. Is that even near justified with the demand we're seeing for Tesla?
Look, and that's always the debate, right? I mean, if you look going back to Tesla Mini, they hated it at $5 billion. They despised it at $1 trillion and pulled the hair out at $600 billion. I mean, I just have always viewed it as a disruptive technology player and not a traditional auto player. That's why I view apples to oranges when you compare them just to the likes of a Toyota or others. I believe they deserve more of a disruptive tech multiple. And I think that's what you've seen happen to the stock, especially over the last few months. Now, with that said, they're held to a higher standard and they need to continue to produce. But I still think we're in the early innings of this green tidal wave playing out. A $5 trillion market in terms of EVs.
Dan, what about the price cuts? Clearly, they are helping sales right now. Now there's talk of further price cuts ahead. Do you buy that, given the fact, and put it in your own words, the murky macro picture right now?
Look, but they've had to ultimately rip the Band-Aid off. I think that was the smart poker move that Musk did earlier this year. It's a big reason why the stock's up. Now, of course, the debate will be, do they need to do more price cuts? I think in China, you'll see some more slight price cuts, potentially in the U.S. as well as the arms race plays out. But because of their margin structure, it gives them so much more flexibility than other vendors to do these price cuts. And I think that really continues to be the story here, especially as battery costs ultimately get reduced over the coming months and years.
All right, meanwhile, Rivian also has some numbers out. Deliveries down 7% in the quarter. That stock down a little more than 2%. What does this mean?
Look, I mean, Rivian's been a nightmare, right? I mean, because on one hand, you have a great story in terms of the production, in terms of what I view as an innovative vehicle, the Amazon partnership, but every quarter it's been dog ate the homework, the wind blew it over, I was late because of traffic. I mean, name an excuse. I think investors have gotten very, very frustrated. This is clearly a slight positive, but ultimately more wood to chop. They now need to execute to what I believe could be the power of the Rivian story.
Yeah, Dan, lay out the bull case for me, because I think a lot of people are struggling really to see the growth opportunity and what Rivian's even going to look like a year from now.
I mean, the bull case is that they'll have enough capital to navigate this. They could raise more capital. If you look at the opportunity, if you call it 10, 15% of traditional pickup or even sport utility convert to EVs with where Rivian sits, you look over the coming years, there's a company that could be doing in the hundreds of thousands of vehicles rather than 40 or 50,000. As that plays out with eventually what will become a positive margin story, that's the holy grail. But look, I think as we've seen with Rivian, we've seen it with Farley and Ford. Look at Lucid. Easier said than done to actually produce and get these vehicles to customers' hands. And I think that's why Tesla continues to be their world. Everyone else is paying rent, with obviously others chasing them, GM included.
I got to ask you about Tesla only via Elon Musk, who's also running Twitter. And the big story is this blue check. I know this is not a public company anymore, but Dives Tech is everyone's favorite Twitter account. Are you going to pay this $9 a month to maintain your blue check? Is he doing anything right to inspire confidence that a Twitter turnaround is coming?
Yeah, look, David, great question. I think the big thing is, and of course, Briggs, one of my favorite Twitter follows as well, especially with NCAA. But look, it comes down to, I believe this is something where that overhang is starting to dissipate. You're starting to now see more of a break-even Twitter business. It's going to be an uphill battle to monetize, right? If you've gone to an Italian restaurant in the last 20 years, bread's free. Now they tell you bread's $4. It's going to be tough to monetize that. So this is going to be a bit of an uphill battle, and it always has been with Twitter, for paying $44 billion for something that I believe is worth closer to $15 to $20 billion.
Are you buying bread?
Again, that's going to look. I'm a believer here. I'm a believer here that it's going to ultimately appeal to some consumers and some organizations, but ultimately, I think this all needs to play out in terms of that blue check. And especially, look, for someone like yourself, now with the succession and everything else, so you're probably more of a blue check type person, but we're not all in the Briggs category. So
you're really inflating his ego here, Dan. I've got 2 hours left with him.
Oh, Dan Ives is a legend. Good to see you, sir. Thanks so much. Appreciate that.